We're talking about how Bitcoin was in a bear flag pattern formation, right? So you had the high from 69,000 down to the 33,000. And then again, notice how all these highs align, all the lows align, staying nicely consolidating inside of that. And that is, again, a bear flag or in spirit of bear flag. Thanks for having me. It's so good to be back and chat with you. Yeah, so it certainly seems like we're getting there, right? We just breached 30,000 for the first time since 2021. And again, we are getting a bounce here because it is a technical level. In fact, might as well get my charts up so we can kind of take a look. But you can see here very clearly that this level here is where we finally saw that support, which makes a lot of sense, right? And if we just go back and kind of rehash what we talked about, I think a month and a half ago, we were talking about how Bitcoin was in a bear flag pattern formation, right? So you had the high from 69,000 down to the 33,000. And then again, notice how all these highs align, all the lows align, staying nicely consolidating inside of that. And that is, again, a bear flag or in spirit of bear flag. Basically, what I mean by that is if you were to look at this pattern on 1,000 charts, approximately 80% or so would be breaking down. That's what happens to them. So again, when we're looking at technicals, remember that it's all about probabilities, right? So we just try to look for things that happen more than they don't happen, and then we go with that direction. The more, obviously, the higher the probability, the better. But you can see right here, we are at support right now, and we're getting a little bit of a bounce back to 31.6 after we breached 30,000. Yeah, so and one thing, I mean, so in general, what I've learned is that levels that we think shouldn't break, they ultimately do, just because it's the psychological nature. It's like if you tell everyone to buy at a level, well, inevitably that level will get flushed through because everyone's betting on that horse, essentially. So that has me a little bit concerned about this 28.5, 29, 30,000 level. I do think that we might have made a short-term low with this Terra Luna UST kind of craziness in Bitcoin. So I did go long yesterday and accumulated a little bit over the last 24, 36 hours on Bitcoin just for a trade. So just looking for a bounce. I do think there's a small chance we could get all the way back to maybe 38,000, which would be a retrace to the line that we broke down from. That's kind of called the retrace to the scene of the crime play. But the one thing I would love to share with you is take a look at this. And this doesn't look pretty, but this is kind of so 20,000 is my best case, right? For me, it's like, I can't see it not going to 20,000. I think there's probably an 80% chance that it goes to 20,000 for me. There's also another angle that I'm looking at, which has a price target of 12,000. And I just love to go through this with you. And you can give me your, Greg, you can kind of give me your thoughts on it. But basically, one of the things that I've recognized here is that if you take the high here at 69,000 to the low here of 33,000, that's a $36,000 drop. If you take the high here, 48,000, and you drop that same amount, 36,000, you get a price target of 12,000. So in technical analysis, we refer to that as a measured move, right? So this move here is equal to what this move ultimately could be, right? So the idea there is a potential for a measured move gives us $12,000 as a price target. The only reason why I think that has some credence to it is if you think about previous bear markets for Bitcoin, how much does it drop? It drops 80 to 85%. Well, if you calculate 80 to 85% from 69,000, it gives you right around 12,000. So just my 2 cents, my little debut of the day for you there, Greg. You have to, I mean, it still should be 36,000. So 69 to 33. Yeah. 36. So then you would essentially take that same level and then drop it down, but it should be right in that range. Yeah. So yeah. I mean, it's kind of interesting stuff. I mean, just playing with the charts. And by the way, for everyone watching this, it's one of the best learning tools in the world is to just play around with things. See what happens. You'll be amazed at how things kind of align when you kind of look at stuff. So, I mean, it just for sure is a major support level, right? So you had the high in 2017, and then you had a move up here, and then you pulled back down here, and then you moved up here again. So anytime you hit on a certain area multiple times, it tells you that there's resistance there. Finally, we broke out above it. But a retrace to that, there's no doubt that would be a technical level as well. So you could technically say, okay, you have the 80 to 85% correction, you have the measured move, and you have that major support. Now, again, I think it's important, and I think you'd agree with this, Greg, is that, you know, by no means am I someone who's going to say, all right, I am only going to buy Bitcoin if it gets to 12,000, because what if it goes to 12.5 or 13? So basically for me, I'm looking at my longer term accumulation zone probably being just above 20. all the way down to probably 10, and, you know, meaning that it could go lower than 12 too. I don't really know, but you want skin in the game and you want a dollar cost average. I think that's the biggest thing. And in all fairness, there's a lot of people out there that, I mean, you could do it at 30,000 here, and I think that's more than fine if you have that long-term horizon. I'm more of a shorter-term trader, so I got to be a little bit more nimble at. Yeah, and that makes a lot of sense. In fact, that's been one of my kind of key points about where I ultimately think the S&P is going to go, is that if you look at it, I mean, we are hitting some support here, but if you look at this longer term trend, right? So this was the trend where it really goes all the way back to 2009, where the uptrend started in the market. And when we got into this kind of cycle of insane money printing because of the pandemic, the markets just took off. And look at the angle of that move versus the angle. And by the way, back here, and you know this, Greg, there was QE already. So it's not like there wasn't QE over here. It was just not the extent that was put into the market here. So in the very least, it makes a whole lot of sense that you would head back towards this area, which just so happens to be pretty much smack in the middle of that longer term trend area, right? So that's exactly kind of what I'm thinking too, is that the Fed ultimately, the Fed doesn't want to see this happen, because I do think that they understand the effects of it. It could push us into recession if the stock market crashes enough. And question is, can they come support it if it does drop at a certain point? But I do think that's very likely to see that. Yeah, it was. And I think that's the bigger question is like, at least the one that kind of jumps at me is like, okay, well, the Fed wants to get asset prices back down. So let's say we do go back to the pre-COVID highs right here, which on the spiders is around 350 or give or take. At that point, does the Fed still have control, or are we spinning out of control into a recession that now they don't have the same tools because inflation maybe is still 5 or 6% at that point, and they can't print the same amount of money to get us out of that? And that's what I think the market is going to deal with. So you have this type of correction going on now, which is the market saying, oh darn, you know, interest rates are going up, we might see a slowing economy, but the market hasn't even started to broach that later, which I think that will later this year, which is, what if we go into a recession, and how does the Fed then get us out? Yeah, that's honestly what scares me the most, is that, you know, at a certain point they run out of the ability to do anything, and then that's where you have this 100-year cycle. You know, we talk about 100-year cycles of the pandemic with the Spanish flu, and then, you know, you're coming up within the next less than 10 years to 2029, and you're talking about potential depression. And it's weird because you can almost see the writing on the wall, which is, okay, we slip into a recession, it gets worse and worse because the Fed can't print us out like they used to, and if they do, you see 20-30% inflation. And then what do? Just step back and let the economy crash and absolutely reset, which is kind of the worst case, but it is something we have to talk about. Yeah, very true. Although I do think it's worth mentioning that you have a much higher, and I think I've seen stats on this, a much higher percentage of the U.S. population is now invested than they ever have been before. Part of that happened, by the way, just in the last, since COVID, right? You know, so many people, you know, just, they were home, they didn't know what else to do. Oh, let's get into trading. Crypto is great. You know, stocks are great. GameStop, AMC. So I do think that it's more tied directly to the economy, meaning if you see a lot of people with 20, 30, 40% losses in their investment accounts, they're going to spend less money, which then slows the economy as well.